Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. Okay, so I am really excited about my new guest that I have on today, Dan. I've known him through the ecosystem in New York City for a couple of years. We finally got to meet Dan, a couple months ago. I know we had kind of a little bit of a WhatsApp relationship and, we got to know each other. But just want to introduce everybody to Dan Stolar. He's a principal at Colibri Ventures, and, a little bit about his background. He, number one, Colibri Equity Ventures is a single family office based in New York City and San Diego. And Dan leads the venture capital strategy and also participates in all things alternative private investments, including sports investing and private equity. And as part of the venture strategy, Dan particularly focuses on investing in emerging venture capital funds. Since launching the strategy in late 2022, the firm has invested in about 15 managers. And, just going back a little bit, Dan started his venture capital journey as an intern at Voila Credit. That was a venture debt fund in Tel Aviv. And before spending time in investment banking at Peter J. Solomon, he focused on consumer and retail mergers and acquisitions. And then after that, he was at Alpha Partners for about 5 years. They do late stage VC and also partner with early stage managers, kind of sharing deal flow on the late stage side. So Dan, welcome to the show. Hopefully that was a good high level intro, and excited to have you on. Thank you for all that you do for the ecosystem and for making time for us.
Yeah, thank you as well for having me on. I really appreciate it. Very excited.
Yeah, absolutely. Really excited. So why don't you share a little more color on, maybe your early life, your career? I always like to ask what you thought you were going to do. Earlier when we were chatting, we just talked about, where people take their career direction and, and where they're heading. So maybe you can share a little more about just kind of what you studied and what your interests were and how that kind of evolved into kind of maybe your early career steps and, kind of where you led to where you are now.
Totally. I grew up in New Jersey, a town called Fairlawn. My parents are still there, and I don't get back as much as I should, but, went to Fairlawn High School. First got interested in business back then. I had an idea I wanted to be a businessman. I had no idea what that meant growing up, but I always liked the idea of it. And then there's obviously a lot to learn from there. So when I got to high school, I was finally able to choose some of my classes. It wasn't like, we had electives for the first time, and I chose a business dynamics class. And right away, I'm like, it was things as simple as just like, what is a credit card? And like, we would watch the Celebrity Apprentice every Friday. And it was back then, I'm like, this is an interesting field. Like, there's so many different ways to do to do business. Mm-hmm. And I found it the most interesting of all the different topics I was studying. Like, I loved history also, but I also cared about making money, and history doesn't really do that very well. And so I quickly realized I wanted to target my college search towards something business related. So applied to a bunch of schools, and when at the finish line of choosing, I was choosing between NYU, Brandeis, and Michigan. NYU and Michigan both have like phenomenal business programs. Brandeis was a little more new, I think, in their business program back then. And then I realized I'm like, I have my whole life to live in New York. I didn't really care about sports back then, but I love the Michigan spirit and things like that. So I ended up going to Michigan to the Stephen M. Ross School of Business. Back then, I thought I wanted to be a banker when I got into college. I had learned about this thing called a bonus and saw it on TV, how much certain Goldman Sachs bankers were getting paid. And, I grew up in a pretty middle-class, blue-collar family, and I didn't believe people could actually make that much money. And I didn't know what banking was, but right away I'm like, okay, this seems like something I should pursue. When I got into Michigan, I realized a lot of other people were pursuing it, learned a lot more about it. And, as I learned about the process of banking, I realized I had a few years to figure it all out. So going into my junior year is when I got my first start in venture. I basically was scrolling on Facebook one day and found this, this internship fellowship program called Birthright Excel. Randomly applied to it, and later learned it was a very competitive program. I got in, I was one of 36 people, 2,500 applied. and it's only gotten more competitive since then. I think I got pretty lucky because my initial interviewer went to my same elementary school, middle school, and high school. So the first interview was easy. And then I made it past the second one and got placed with a firm called Viola Credit. Viola venture and mezzanine lending firm. I had no idea what I was doing, but that was the summer when Wix went public, Waze got acquired by Google. And I was like, oh, there's this thing called venture capital that is a lot more interesting than investment banking. So fell in love with Dan, and I'm like, I should figure out how to be a VC. This is more interesting. Back then, nobody was really recruiting at Michigan, though. So I basically continued on the banking path. Went through the whole recruiting process and joined a firm called Peter Solomon, a consumer and retail M&A firm. And that was my first official job. And do you want me to stop there, or you want me to keep going?
Well, I wanted to double click on the Birthright Excel program. So my knowledge, I know there's this thing called the Birthright where, I believe they sponsor you if you, they sponsor you and allow you to go to Israel. Is that correct?
Yes, that's the broad Birthright program.
Yeah, and then the Excel sounds almost like like an accelerator for like high finance or maybe something like that to kind of get you into banking and learn more about business and private equity VC.
Yeah, it's actually not. It's business focused. I wouldn't say it's like finance focused though. So a lot of people go to startups and whatnot. It's actually funny. This all weekend I'm doing programming for Birthright Excel because it's their global summit this weekend. And so taking a step back, Birthright Excel was founded in 2011. And it's a small class initially, and the idea was to connect like high achieving Jewish students with Israel and get them involved in Israeli business. So every person accepted gets paired with an internship program. Also, internships are not really a thing in Israel, so you end up doing a lot more. Generally, when people enter the workforce, they're already post-military and possibly post-college. And so it's kind of like you eat what you kill at these things. Like you're willing to take on a lot more than what an intern would do in the US. I got really lucky to get into this program. I'm very thankful for it. But now it's 10 years later, or I guess I did the program in 2023, so it's 12 years later, and it's grown substantially. I mean, it's still highly, highly selective, but the people and the alumni in it are kind of are incredible. Like you have people who have founded their own firms, like the founder of Keyframe came out of it, the founder of Avid Ventures, principals at a variety of venture firms, D1 Capital, Addition, which is Lee Fixel's fund. You have people, Avery Rosen at Lead Edge, one of the main partners there. And we have so many people in venture who are doing so well in the program. It's kind of incredible how many people came out of it and how many people are doing so well. I'm actually, from what I know, the only person on the LP side for now. I'm sure that will change once people start getting some more liquidity and doing their own investing. Like we have people like the founder of Exonius went through Birthright Excel, so that's why our highest flying company. But yeah, it was really a formative experience for me, and still I consider that summer my favorite summer of my life so far. Being in Israel was great. There was so much to do. Also, like I was 19 and I could drink in Israel for the summer, and that was a lot of fun. And being with a group of young people, just doing that, it was really great.
Yeah, especially, I don't know if you were able to hang out around Tel Aviv, but they got all those beautiful beaches and stuff. I went there.
That's exactly where we were.
Yeah, so I went there on a family trip, and it was just a magical place. So just had really good experiences there.
Yeah, and you also see the power of networks there more than anywhere else. Everybody knows each other.
Huge ecosystem there.
Yeah, and everyone's connected to each other, and you really see how additive building a strong network is. And yeah.
And then you talk about being a businessman. So like when you were a child, who did you kind of look up to, or who did you think was a business person? Like, were there any personas or people that you saw in the media or on TV? You're like, wow, that's who I want to be. Maybe I saw Bill Gates or something, or.
Honestly, I don't have anybody that really comes to mind right now. I'm like Ari Gold and Entourage when I think of business. Like people who are characters and people who have like outsized opinions, because I'm someone who gets along with pretty much everybody. I'm not very controversial. I have opinions on things, but like I'm very good at bonding with other people, and I always respected people who didn't care about that and were willing to just really go out, and they didn't mind making people mad. Even if they weren't right, like they will go to bat for their own opinions. Whereas I am much more, I do have opinions, I will go to bat for them, but I will put them, like, I can get along with people over anything. Yeah. And like, I'm very, very slow to cut somebody off. Like I have very few people I consider enemies or people I'm mad at. And so like when people go the opposite way, it's always fun getting to know them. So somebody like Ari Gold was interesting for me. Like I like the show Entourage. So like, understanding him. And then when I got to college, I remember looking up to Carl Icahn as like an actual investor, someone who has deeply held opinions and not just goes to bat for them, but will take over a company for them if he feels he's right. And whether or not like my opinions on who I look up to has changed, but I like looking up to different parts of people, not people as a whole. I think it's really easy to put somebody on a pedestal and then have that view of them shattered when you find out something you don't agree with or like a political opinion they hold. And it's like, I don't know. I think looking up to somebody as a whole you shouldn't do. You should look at the different traits that they have. Because a lot of times people have great traits that you can look up to, and sometimes you have to ignore things you don't like about them.
Yeah, no, that's a good point. Yeah, I mean, sometimes it balances it out, right? I mean, there's great traits, and then there's maybe traits that don't work that well with you, but it works okay with somebody else. So it's but all those make that whole person, right? And that's what makes that person hopefully special,
totally.
Holistically. So let's talk. Okay, so Viola Credit, you were there. I'm assuming you learned a lot more about lending and probably even about private credit and a lot more about how the machine of business works.
Totally. And I got to learn a little bit how to underwrite deals, what we do when we meet founders. And honestly, like I was still pretty young, so they didn't give me like a ton of there was a good amount of responsibility given to me. But I didn't speak Hebrew, so that limited me.
Okay.
And I couldn't really do any of the mezzanine lending side because almost all of that was in Hebrew. But I got to like actually help on a few deals and understand like a lot of venture isn't as sexy as it seems. Like you will spend a lot of time mapping out comps and like understanding what the competitors are doing and doing industry research. And that's a majority of what I was doing that summer. And I hope it was helpful. I haven't caught up with them in a while, but you realize like things can seem really glamorous and you still have to like doing the busy work everybody enjoys the glamorous part of meeting founders and, hanging out with cool people. But if you're not willing to do the investment memo in the background that doesn't excite you, it's going to be a hard job. And so I did enjoy doing all of that. And so that was helpful to know. I also had the biggest office I've had in my life still, which is great.
And tell me what happened after that.
Yeah, after that, realized I wanted to get into venture. Recognized that it's hard, obviously. Michigan was not a target school back then for a lot of firms. And I don't know if it is, but our alumni network in venture is, I would say, among the best. It's not deep, like it's not Stanford, but we have a lot of GPs that have come out of Michigan that now run their own funds. We have a huge community in the allocator community, especially, which is great. But at the time, only Insight was recruiting on campus, and I did not get the Insight internship. So back to banking it was. I committed hard to trying to get into venture. It was just harder than I expected. And I missed the banking recruiting process back then. So I had to figure out, how do I get an internship here? I ended up getting connected to a firm called Brad Brothers Harriman, which is, are you familiar with them?
Yeah.
Yeah. So very, very old school private bank, still completely partner owned, not public. You have to buy into the partnership kind of place. It's steeped in history. Like you go in there and like they'll have the first check on the wall and they'll have, historical artifacts all over the bank. And it was super cool. I was doing municipal credit research, which wasn't that cool. But taught me a lot, learned a lot about attention to detail and like just the little things. Like it was a lot of looking through credit documents over that summer. And, there's a lot. Like I remember getting yelled at for like not noticing an R was capitalized in revenue because like the state of Illinois had redefined what revenue means in this specific bond. And I'm like, wow, that's ridiculous. But it's something you take with you as you go into banking and you go into other things. Like you do have to pay attention to these small details and they do matter.
Yeah.
But I did not like municipal credit. So that was not a place I was going to go back to. Although I did love Brad Brothers as a firm. Municipal credit was not going to be for me. And so right when I got to senior year, I pivoted to recruiting for banking in a more dedicated way. And that was great. I think a lot of people do the internship recruiting. Banking is very different now in how you get in. Back then, most people got their full-time offers through their internship, but there's still a big full-time recruiting process. But a lot of the top talent was really sucked out of the process because they already accepted their internship full-time offers. So I was actually able to meet with a lot of really great firms without having to compete with some of the other top talent in my class. And got into the process with Peter Solomon. Peter Solomon is one of the first independent banks to kind of spin out of the Lehmans and the Solomon Brothers of the world. Peter was deputy mayor of New York back back in the day, and I loved the boutique model of banking. I like being able to be just more client facing, taking on more responsibility than you would in a larger firm like a Goldman or a JP Morgan. And I'm not saying they're obviously great programs, but I think the boutique model spoke to me, and had a few offers, but I thought Peter Solomon would, now it's called Solomon Partners, by the way, would give me the most interesting experience where I could learn the most. And honestly, the culture, I care about culture a lot at a place, like both in firms I'm investing in and people I'm working with. And they had a culture that, they cared about being there. People liked being at Peter Solomon, and you can't say that about a lot of banks. And so, I joined Peter Solomon. I guess that was my first shot at college, 2015. And that was definitely a transformational experience for me in terms of my professional understanding, what my professional capabilities were, and what I'm good at and not good at. I realized very quickly I did not want to be a banker. It was fun. It was hard work, and I enjoyed the people there. I think I wasn't suited for being an investment banking analyst as much. I think it was a lot of just the busy work was really busy, and I think I wasn't excited by it. And I knew in the back of my mind I wanted to get into venture. And so I was very well liked at the firm. I would say I wasn't the strongest analyst by any means, but I was well liked by the firm, and I still stay in touch with a lot of my managing directors, a lot of people I work with, and most people don't.
So, usually in these different career stints, there's a couple takeaways. So I think one of the things that you mentioned, just maybe talking about the block of your career in banking, sounds like one big thing is just paying attention to detail. And I'll share one for me. I mean, in my career, working in, B2B SaaS, just communication, a lot of times I would write long paragraphs and it would just be too much to analyze. So I would start getting into the habit of just chopping it in half, or even if it's a high stakes email, maybe sleeping on it, and then waking up in the morning and seeing if I still feel the same. So, what are maybe one or two other nuggets of just learnings in your block of your career in banking?
Yeah, so attention to detail is definitely one of them. I'm not everybody knows that. I think. I also think the biggest thing about what banking has helped me with is understanding what the bar is for quality work. And I think banking goes overboard in you're fixing for little periods and changing the colors on different things. And that honestly a lot of it's a waste of time. But 80% of it isn't a waste of time. And the thing I really learned is that if an error might not seem like a big deal, but if you're looking at an external person and they are distracted by the error, it's a big deal. Even if it's a color being different, if they're taking a second off of what the message should be on the page because of your mistake, it's a problem. And that's what you're correcting for. It's keeping people fully on message. So a lot of VCs and investors who did not go through banking, I don't think it's a technical ability. And I'm not at a late stage firm. I think learning, I'm great in Excel. I'm not as great as everybody, but I'm good enough, and it helps you there. But unless you're at a later stage firm, it doesn't really matter. What matters is how much work you actually need to be putting in to be successful. And when you're working 80 to 100-hour weeks in banking, and you realize when you come out of it, there's people you can see who's also doing that still because they want to as a venture capitalist. And a lot of people aren't doing that, and you don't need to do that. But there are people who really differentiate because they put so much time into making things great. And you see people's work product, you see their decks, you see their their pitches, and you can tell very quickly who was the consultant, who was the banker, and who wasn't. Because there's people who are just really even if they're a better investor, even if they have better connectivity, if you can't deliver your message well, you're not going to move forward in the process. And I think there's a lot of people with banking consulting backgrounds that probably get further than they should because of they're able to get that 80% there really well. And other people aren't. They get distracted by a very sloppy pitch deck. When I was on the race, I'm on the race selection committee now, I do a lot of different materials for them. Raise is an LPGP conference for people who don't know, usually held in October in San Francisco. And you could tell the GPs who put a lot of time into their deck and the GPs who think the message just carries itself, and it doesn't. And putting that time and effort in is just really important. And I think that's what I figured out in banking is it does matter.
And it also just compounds over time, I would assume.
100%.
Yeah.
In terms of, wait, what do you mean by compound? In terms
of
just
all of those different efforts, right? Especially when you're kind of paying attention to detail, I feel like it just compounds over time and turns into kind of a more refined product. One of my favorite quotes is from Steve Jobs, right? if you take these jagged rocks and you put it in like this spinner, like over time, that spinner will just kind of have smooth rocks. But in the beginning, you're kind of refining your skills, right? You got a capital R that's supposed to be lowercase, and you got a couple of grammatical errors, but you start paying attention better, and then hopefully your presentations are flawless because of that.
Yeah,
time
it's also like,
you put in.
and I think it's good, like even like CRM usage. I remember, and I'll talk about this in my next role. Like a CRM is only as good as you make it.
Yeah.
But when you like, if you don't put time into work on your CRM, it might not seem consequential. Like do that at the end of the day. But if you look back in a year, all that work really does pay off, and it's really powerful, and it's really hard to replicate if you haven't been doing that. Like you're never going to backfill your CRM. You might hire someone to do it, but that stuff, like Insight Partners, for instance, like one of the things that makes Insight different is that their CRM is so strong. Like they have data on like every single company because they have 30 analysts that get harped on for you need to have it all in the CRM. And their data set is incredibly, incredibly powerful. And they know almost every company raising, and just like they're differentiated on that. They have a lot of things that differentiate them, first off, but they're differentiated in that regard because of that CRM discipline. And they've been able to leverage that in a variety of ways.
Sure. Yeah, and they say VC is a CRM game. Some might say that. So, just dovetailing on that, what made you kind of a little more interested in venture? I guess what made you kind of have that realization? So you said you didn't want to be a banker. So maybe it's kind of some of the things that you really enjoyed doing. Maybe you liked technology and kind of investing in the future, but what was it that kind of really attracted you to realize that, venture was kind of the career path for you?
Yeah, I was definitely interested in technology just overall early on as a kid. Like not interested enough to become an engineer, but interested enough to like know I had some sort of professional aspirations to touch it. But the summer in Israel is really what got me notably intrigued in venture. And it wasn't just working at Viola Credit. Like that was luck. So I was there the summer that Wix went public and Waze got acquired by Google. And two substantial exits, both for Israel and for people still use Waze all the time now, even though there's Google Maps. And I saw the way venture could really affect a nation. Like those two companies, like you had Benjamin Netanyahu talking about it on stage live in interviews and things like that. Like no one does that in the US. Like you might see a headline in like TechCrunch or the Wall Street Journal about it, but this isn't when there's an exit in the US, there's not a moment of national significance. And I think being in Israel for both of those exits made me realize that venture can really help people and really change the trajectory of a lot of people's lives. And it was like that, plus having the interest in technology, plus really enjoying just meeting founders and people like that. I was just fascinated by it. Sure. And it just seemed like they had and the way of life was cool. It wasn't just sitting at your desk all day. It was like you actually go out and meet people. Like the thing I don't like about banking is that from sunrise to sunset, I was behind a computer. And venture was just so much more dynamic. You meet so many different people. You're much more externally facing. And I realized that was something I wanted, was being externally facing as well. Like I didn't want to be inside of a company, only talking to people at the company. It's like now people ask like, do you have a work, like, oh, do you work with this person? It's like, no, I work kind of with them because they're at another firm, but they're not like my coworker, but they're like someone I work with, or they're like in my industry. And that's like, we're 6 people here. And so almost everybody I talk to isn't that my company.
Sure. And, we just spoke about a common friend, Jesse, right? So he had his unique journey into venture, and, venture is not really a traditional degree that you get. There's no degree or program called venture capital or private equity, right? So a lot of us kind of get into it within our own journey. So, what advice would you have for maybe a college kid that's interested in venture and maybe they're having trouble getting in? Maybe what are some things that, you've used as tools to kind of build your skills and obviously, land the role in venture, but, maybe new analysts that are coming in or people that you're doing mentorship sessions with, what kind of advice do you have for them?
I think it's hard to get into venture. I don't even know. I'm trying to figure out if it's harder or easier now than it was, because now there's more analyst programs, but there's also a lot more competition for those roles.
Yeah.
It's easier to get into venture out of college versus how it was before.
Sure.
I think you have to make your own luck. Like that's what I tell people is like, you need to put yourself in a position to get lucky. You have to be open to a lot of dead ends. Like it's a frustrating process. Like you need to put yourself in the position to meet somebody that you wouldn't ordinarily meet. Like the way I got into venture, for instance, I was at Peter Solomon and my colleague Ben Freeberg He was an analyst with me, and we both recognized that we did not like banking very quickly. He left it for 8 months to become Alpha's first hire. And then when I finished my 2-year program, he hired me in. Or he brought me into the recruiting process, but with a significant leg up on everyone. And I studied, I did well, and we can get into Alpha in a little bit. But I got lucky meeting Ben, and I got lucky that he got the job at Alpha. And then I was ready when he, gave me the call. He's like, we're looking to bring on our second ever hire at Alpha. Would you be interested in? A lot of other people, it's like, you have to reach out to people, you have to go to events, you have to just like be in the zone of interest. Whereas when the right time comes, you just need to be ready to hop on it. So if you just apply to job posts, you're never going to get into venture. Like you might if you're top of your class, if you check the box in every way. That's how you do the job application. Like if you're just a random person applying into venture, like you should not be applying to firms directly. Like you should be getting connected with people, meeting people for coffee, doing it over and over and over again. And a lot of it's going to go nowhere. Most of it's going to go nowhere. But eventually, like you might have a coffee with someone, and 3 months later, they give you a call, be like, "Hey, my friend I just had drinks with is looking to bring on an analyst. I think he might be great for it." And it's just knowing people and putting yourself out there and be willing to honestly waste your time. Like you just don't know what's going to come out of it. And time's valuable, but as a student, like you just got to put yourself out there. Go to random tech events. Like I met Rick Zulo is a VC that I love. Where I'm not an investor in his fund, but I'm a huge fan of his. And like I, as an intern, went to Dan Primack's liquidity event when he used to run those in New York. They're like I guess they were like tech events that he used to put together. And Rick was a student at Columbia, and he was going into VC. And I'm like, wow, this guy's so cool. Going into VC, and he's someone I've stayed in touch with, and now he runs a multi-$100 million venture fund. And just from that meeting, like I don't know if I'd be friends with Rick right now if I didn't do that.
Mm-hmm.
I'm just catching, and he's been super successful with Equal Ventures, and super happy for him. But you just gotta make your own luck. I know it's easier said than done, but it has to be you have to live with that mindset and like really be willing to put yourself out there. Like even now, I go for drinks or dinners every single night. Like I don't cook. I don't go to grocery stores. I'm out. I'm also not married or anything, so it's easier. But every night I'm basically meeting with somebody different. And I think that really compounds over time and puts you in a position to do really well. But it's hard if you don't put yourself out there like that. It's just hard to get into VC, and it's still hard even if you do.
Yeah, and we were referring to just a point about just giving back to people, maybe not always expecting something in return, right? But I think that also compounds over time as well, and you never know where people will land. And I thought that was really interesting with Jesse's story as well in terms of how he got in, right? He made his own luck. He knew that he wanted to get in to this space. And I think that translates with everything, right? If there's a desire in your life and a place that you want to go in your life, you just got to make your own luck, kind of like how you said.
So, oh, totally. And like when I left banking, like I finished my analyst program without my job yet.
Mm-hmm.
Like I had an offer from a pension fund actually to become an LP, funny enough,
sure.
Which would have been a very interesting pivot, and I guess would have led me back to the exact same place in some way, shape, or form. But I knew that like in my heart that I wanted to work. I needed to experience working at a VC. Whether or not it would be my end all be all, which it hasn't been. I needed to know. And so like when I took the World Alpha, like it definitely paid me a lot less than other places, but
yeah,
I'm glad I did. Like I wouldn't have, I'm very, very glad I made that choice.
Sure. So let's talk a little more about just the LP side, and maybe you can, whatever you're allowed to share about Colibri, we'd love to, hear kind of a high level overview, and then how you guys look at asset allocation, and then maybe just how you look at managers and how you guys pick them. And then, maybe we can end up with just kind of advice that we have for managers.
Yeah, totally. So Colibri, we're a single family office. It's a real estate family by background, Mexican, originally moved to the US in the early 80s and built up a pretty significant real estate firm that ultimately led to them starting the family office in late 21, early 22. I got in, honestly, you have to put yourself, speaking of making your own luck, I answered a random LinkedIn message to get this role, which ultimately led me to I wasn't expecting much from it. I'm like, oh, this sounds high level interesting. Ultimately met the family and fell in love with the position. They more or less gave me a mandate to build a venture strategy from scratch. And when I got that offer, I'm like, well, this seems like I'm skipping a few steps in my career where I'm going to have the money to invest, but I don't really know what strategy yet.
Sure.
So when I
It's
joined,
totally the opposite of the typical venture manager.
totally, most of the time they know exactly what their investment thesis is, and then
But
have to
there's
come
no
to people
capital.
like me to get capital. So that was a funny situation to find myself in.
Yeah.
So at Alpha, I haven't talked much about it, but Alpha's a late stage co-investment fund. And they work with managers to follow on in their direct deals later when those managers have a pro rata right that they can't fill. So I kind of was always acting like an LP, where I was filling people's best deals, but not investing in their funds. And so when I joined Colibri, I'm like, well, I don't really have a great founder network, and Colibri doesn't really have a recognized brand, at least not yet, or not then. We're going to get very adversely selected in deal flow. Like we're not going to build a good direct strategy if we just start right now, unless we take a really hyper sector focused view. And I wasn't going to do that. But I recognize that emerging managers outperform, smaller funds outperform, and they make the best, partners. And so essentially what I did was pitch the family on the strategy of we should partner with the top emerging managers and we're going to do their best deals. And we can build a portfolio like that. And over time, scale it up with some of our Mexican partners if we want to, or just keep it all internal. And so about 3 years ago, I pitched them on that. They were gracious enough to agree to the strategy, and we've been kind of off to the races since then. I would say we've been deploying for about 2.5 years. We've done 17 funds since then across 15 managers, and we've just started doing our first re-ups. It's been a great ride so far. We've done 8 or 9 directs alongside those managers, and I spend less time in direct opportunities and much more on the LP side. And yeah, I think emerging managers are an unbelievably interesting asset class. It's one of those where there's a ton of deals in it, and there's not a lot of people who do it professionally. And I recognize that gap as well when I was joining. I'm like, it's kind of like what pre-seed was. Like a lot of people weren't doing pre-seed for a while. There's a lot of firms that professionally do pre-seed. I recognize that these sub $100 million, sub $80 million, sub $50 million funds, like there aren't that many professionals doing it. Like I know most people who do it as a full-time role, I probably already know. Like, it's just not hard to meet all those people. But there's so many exceptional managers raising capital. And I just felt like there was a really good way to arbitrage that. Like you can pretty easily meet and get into great emerging managers by putting yourself out there as an LP. And
what are some things that?
Sorry.
Well, I was gonna say, maybe the second piece is, as there's so many managers, so much talent. What is some of your filtering criteria? Maybe you can talk about like the qualitative aspects. We talk about being a good human being. We talk about the traits, right? So there's some traits that you might like, and there's some traits that maybe are not as attractive, but you take it as the package. So that's kind of the soft skills, the qualitative, and then on the quantitative side, what are some of the statistical data points that you're looking for when it comes to performance?
Yeah, so I guess we spend a lot of time underwriting the relationship. I would say more so than most LPs. The family I work with is very trust-based. They've made people a lot of money just earning it through trust, and they've been successful that way. And so we spend a lot of time with our managers before we invest. I would say more so than most people, and definitely for our check size. I don't actually send people a lot of, I don't do a lot of quantitative work on the underlying funds. A lot of it is like, there's a baseline that you need to get to, but we want to understand how you are as a partner. And there's a few things I look for beyond that. I like sector-focused funds. I find if you're looking at a lot of funds, it's very like you have to differentiate. And so when I look at, let's say 15, like let's say fintech, for instance, if I want to do a fintech fund, like I'm going to meet the 50 fintech managers or 100 or whatever it is. And I can pretty easily figure out who I like the best and who are the top funds and who I gravitate towards the most over that or in those sectors. So sector focused. I like higher ownership funds. My view is that venture, I don't want a diversified fund. I think diversified funds can work, and there are some great examples of them working. But I generally like any given fund to have a chance at really wild outperformance. In venture, I think if you're a decent fund, it's kind of a waste of time. I want my funds to have the ability to wildly outperform, even if there's a risk that they're going to underperform. We view venture as like an asset class we are trying to get alpha from. We have steady cash flowing real estate. We don't need safer deals. I don't need somebody with 50 companies in their portfolio. And I know there's people who completely disagree with me on this, and that's okay. People have made a lot of money investing in those funds. But I want potential 5, 10x funds. I don't want 2 to 3x funds. And then On the data point, it's interesting because like as an emerging manager, you don't often have a huge track record.
Sure.
I want to see examples of like how you partner with people, why you get access, because your track record might be great, but it might be on $10,000 checks, which, I need to see like when you 10 to 20x that fund size or that check size, how does it work when you're not as friendly as you used to be? Like when you're not just sliding into a round, when you're actually leading the round and you have to cut some of your friends back. Like, can you do that? Do founders want you to do that? It's a lot of like understanding behaviorally, like how you operate, and how you just interact with the world. And I guess the biggest thing we look for is like, how transactional are you? Like, we don't want transactional people. Like, I'm going to pass on some great funds that will probably deliver me great returns because like the manager only cared about us for our money. Like, they didn't want to partner with us. They didn't want to help us grow. It's like, there are people who just view LPs as like dumb money. And that's fine. There's plenty of LPs that are, but there's plenty of VCs that are also. And how you treat people just in the world and in all your interactions matter. And so we spend a lot of time on that, and we'll just cut people off if we think they're, just it's like tit for tat. This is what you get. This is what I get. And that's it.
Sure. When people talk about access, what are some red flags? I mean, in my opinion, because obviously everyone's trying to talk about the access that they have, right? So it's always a red flag for me if someone's just saying, look, I'm part of an angel group, or I've got a venture fellow program and scouts are going to go find deals for me. So what are some of the ways that you've seen access be more intriguing to you guys? And kind of maybe their unique approach to getting access. Maybe it could be like an industry sector that they come from, or anything. Maybe some trends that you've seen in terms of the concept of access.
Yeah. So like I said before, I like sector focused funds. I think the generalist funds are very hard to underwrite.
Yeah.
I do think some of the best funds will be generalist funds. But I don't know how to I think they all sound great at first. Like,
sure.
There are so many funds that I was unicorn company. Like I was at a unicorn company. I was employee, 3 to 10, and I have great access because the time I was in New York, I met all these great people, or SF, and all my friends are engineers. I'm just investing in their companies. I'm sure that will do well. But most of the time their access is with smaller checks. They haven't stood out from the other founders, and they haven't stood out from the other VCs, and there's just so many people at that story, and there's so many unicorns now. And you're going to be a great angel investor, but your access probably won't scale over time. And as you're away from your operating role, I don't view that as something that just endures. So the sector-focused funds, I find that people come from industry. They actually have a domain expertise where funds in their space will know them. Or companies in their space are going to know who they are, and they're going to come to them. And they're going to be brought in by other larger firms to solve that gap. So like Courtside Ventures, for instance. They are a fund focused on gambling, sports tech, and real money gaming, and collectibles as well. They probably see every deal that touches sports because they have carved that niche out for themselves. And there's other funds doing it, but I guarantee every single deal Courtside views. There's 3 partners. They all have different focus areas.
Sure.
And they have proprietary access. And someone else can build that access, but they realistically, their LPs are all sports teams owners.
Yeah.
There's so much connectivity to the space, and the way they talk about their industry is so deep. That's what I look for in manager. It's like, if I could have 15 Courtside Ventures, I'd be thrilled. Sure. And every manager just held themselves, the way they do business, the way they treat people, the way they get back to me, the way they partner with me. All of those things compound over time. Yeah. And we're a small LP in them, and they've been great to us. They're a $100 million fund. They have major billionaires upon billionaires in their fund. They don't need to be nice to small investors like me, but they have been unbelievable partners, and everybody I know has great interactions with them. And because of that, that just compounds.
Sure.
And I lost my train of thought, but yeah.
No, that's amazing. And when it comes to just
the
kind
access point, that's what it was.
Yeah, the access point, and then kind of as far as the performance, you talked about just having a 5x on the fund, right? So, are there other specific KPIs that you're looking for in terms of kind of, the MOIC, or kind of just the multiples on kind of the markups that they're getting in terms of their portfolio companies? Are any of those things important, or are you looking at mainly kind of just their access? And obviously, there's some table stakes, right? But are there any specific things that maybe you see as a red flag in terms of just performance numbers?
there's definitely I know what bad performance looks. I know what bad performance looks like, but however, good performance is really hard to measure. Like in emerging managers, it's like a pre-seed round or a seed round. Like you're betting on the manager themselves, because like there just isn't going to be a track record. Like it's unlikely you're going to have attributable track record from your mega fund that you spun out of. Yeah. So I can't really weight that. And if you do have a track record, it's probably on angel deals. So yeah, so I want to see that you're getting into good deals. Can you pick well? Like I do want to see all of those things. Are you getting into good logos? And like, do you have markups from, brand name funds in your angel portfolio and like things like that?
Yep, I'm still here.
Okay, got it. Yep. Sorry. And then it's really understanding the person and then doing a lot of references on them. Because like I'm not going to get much from your track record. It's more of like directionally. Am I getting good things? And like, does your fund criteria meet what I'm looking for? Then it's talking to other LPs in the fund, other people looking at you. Like I spend a lot of my time talking to other fund of funds, other endowments, things like that. Just so like everybody has different things they look for and different people they get excited about. And you can kind of shortcut the reference checking process by talking to other LPs who do it deeper. Like I remember when I was trying to dive in on one, I was trying to get a generalist fund across the finish line for us. We didn't end up getting there, but I love them. And I was talking to another LP of theirs, and they had 45 pages of reference notes that they sent me. And like that's the type of work that I try and do more of, not just let me look for a number in your track record. I think more advanced LPs, not more advanced, people who do more like fund threes and beyond, that's what they will do a lot more data-driven work. But I think if you're doing funds 1 and 2s, and we do a lot of fund threes too, and there is a lot more to unpack there. But the funds 1 and 2s, there's not much on the data side that I'm looking for as much, more just directional things.
Sure. I think there's some special advice that you could give around just building a venture strategy, because that was kind of a challenge that was thrown at you coming in. So as families, they come from different backgrounds. Obviously, they have a multi-asset approach. What would be some advice that you give to a family in terms of building a venture strategy? I mean, I'm assuming some of it you just kind of, workshopped yourself and kind of came up with a plan, but now looking back, obviously you guys have matured into more of a professional investor in managers. But, if people that come from like real estate or infrastructure or manufacturing, now they're like, hey, I want to get into venture. How would you recommend them to do it? A lot of people just partner, sometimes with other LPs and some other fund of funds. And, to your point, they just go to a bunch of events and try to digest a lot of information. But any other, best practices or advice just from your learnings, because you went through it and you built it from scratch pretty much.
Yeah, no, it was. So I actually talked to people.
It sounds really scary too, having to be like, hey,
it's scary, but it's so much fun. Like I'm so glad I had this role has been awesome.
It's a fun challenge.
The family's been awesome to work with. And so I talk to people a lot about this because people are constantly trying to figure this out. And the first thing I ask people is like, what are you trying to accomplish with venture? Like there's a lot of different ways to do venture and none of them are necessarily right or wrong. And like everything I said about funds, you can take the exact other side of it and a different LP will be very well served in that strategy. Like in terms of like diversified generalist funds might be the best fit for you. So like what I want to understand when somebody asks me this is, what do you want to solve for? Are you solving for access to technology for like your underlying real estate or underlying businesses? Are you trying to get the highest upside? Are you trying to do like safer strategies? Do you want to be involved in the program or do you want it to be much more passive? So like that's the first thing I try to understand. Then it's give yourself time, like meet with a lot of people. Like do not like whenever I meet another LP and it's like, what investments do they regret? It's like the early investments. It's almost always because I don't believe there's such thing as a truly bad venture fund. Like you meet one fund, if you were to meet any venture fund and as the only venture fund you met, I almost guarantee you'd invest in it. They all sound good. Everybody has a great story. Nobody bad starts a venture fund. Like you generally have done something right in your life if you're in the position to start a VC fund. Founders might just have a good idea to start a company or an idea to start a company, but nobody's like, yeah, I think I'd be a really good consumer venture capitalist having never done anything like that before. But you just spend time with a lot of people to figure out what you want to do or like who stands out to you. So give yourself that time. Like when you say you want to do venture, give yourself a year to meet with people before you start deploying. We didn't do that. And I think that's because I came from a venture background. But if I was to be an organic, if I was to start doing venture as with no background, I would give myself a year. Then I would say, if you want to be active, like figure out if you want to do emerging managers or not. Like don't try and dabble in it though. If you're going to dabble in it, allocate to a fund of funds that does it. Because there's too many managers to sort through, and the way you do well investing in emerging managers is spending time with, you have to just meet all of them. You have to really have a high top of funnel. And so if you're not willing to do that, don't just pick random ones. Allocate to, the Screen Doors or the Slipstreams of the world, or the, name your Sendanas, like name your emerging manager fund of funds, and they are great partners and they can be really great at helping you figure out the funds you want to do. But at the end of the day, like figure out what you're solving for. Like if it's technology access, like you might not care about the returns of the fund, but they might give you great access to a network you don't have access to. And that's fine. Like some families, like venture's not going to ever move the needle. Like unless they 20x their fund, like, there's plenty of people, if they put $1 million check into a venture fund, giving them $20 million back is great, but that likely doesn't change anything in their life. Sure. And so what does change though is connecting them with a tech company, connecting their underlying operating business to something that really changes their business. And that could make it all worth it. And so I would say just take some time and really figure out what you're solving for. For us, we wanted a high upside strategy that we could scale up over time. And that would complement some of our underlying business, like complement the real estate business. It actually started with more of a prop tech focus, and we diverted away from that just as we realized the emerging manager space is broadly a good way to work. But yeah, the first thing I'd say is like take time to figure out what you want from your strategy. And if you want a lower risk strategy, like you want to do these more diversified funds, they're going to have more shots on goal. They might not give you the same upside, but you're very unlikely to lose money in those strategies. So figure out what you want to solve for.
Yeah, no, that's really helpful. So I know we got 2 minutes left. I think one more question that I might have to have is, we talked about the different traits that make up a character. So what are some of the common traits that you've seen? And, we've talked about some of these things, like in terms of consistency and, being a good partner and building trust. But across the board, when you look at the best managers, maybe even the ones that you haven't allocated to, what are some of the common themes that you're seeing holistically as an investor and also just as a good partner to work with?
Yeah, I would say people who get really deep with their companies, I think there's different levels of depth of knowledge in managers. And I remember realizing that some people, there was just a huge difference between them. Like we allocated to a firm called Pathlight. Used to be called Exponent. I remember, and they were among the fintech funds we were meeting, and as they just talked about their companies, they were able to go through levels of detail that other people couldn't. And it's because and that comes from, I think they lead their rounds, they take high ownership, they don't do many checks, and they're highly, highly involved in their companies. I think those lead to the best types of investors because for us, we want co-investment. Like more diversified funds will offer you more co-investment, but the smaller concentrated funds will offer you higher quality co-investment and probably more of it in any individual fund because they're so involved and they can get bigger.
Well, it's also just such a concentrated portfolio. There's so much conviction. They have a lot riding on those investments.
And when you have that high conviction, more. Like you just can go deeper. And you look at the best funds in history, and they're almost all concentrated funds.
Absolutely.
Like people who took those big swings and were willing to take risk. So I look for that in the manager. People who are really willing to bet big on things. And look, they're going to be wrong sometimes. I'm going to pick some people wrong. But when they're right, it's going to make up for a lot of those bad bets. And I'm willing to take that risk.
Sure.
So that's people who are just deep, willing to go and that's why I like sector experts. They tend to be a little deeper. And and all of our funds, I would say that's what really stood out to us. When we can go into a meeting and go deep into their portfolio and they don't need to look at anything. They'll just talk about it. And it's always shocked me. And I still don't know how some of our managers do it. But it's great. And they've been just amazing partners. And then just how do you interact with the world? Like, that's what I look for. Like, why are you doing this? And how deep can you go?
Sure. Well, hey, Dan, I know we're at time. I really appreciate you being generous with your time. And look, I've seen you around at a lot of these community events, and I see you really, supporting the ecosystem. So thanks for all that you do, and your team at Colibri. I met one of your partners a couple of weeks ago. So again, thank you, and looking forward to seeing you around.
Nice. Thank you, Joel. I really appreciate you having me on.
Yep. Take care. Have a good one.